Hey guys, and welcome to another video. Now today I want to talk about Salt. Now Salt has been making some huge gains since his ICO recently. So let's find out what this is about and if it's a viable project for the future. So what exactly is SALT? So SALT stands for Secured Automated Lending Technology, and the strapline on the website is blockchain-backed loans. Now, essentially what SALT do is allow its users to leverage digital assets, allowing them to have access to cash and without having to pay exchange fees or having to exchange the cryptos to fiat currency. And the key benefit here is you maintain your long position, so you don't have to sell, for example, your Ethereum to get your USD. You can essentially leverage your Ethereum and obtain some short-term cash if you need it for whatever reason, and then once you pay off your loan, you can obtain your asset once again. So how do you do this? Essentially you use SALT tokens to participate in the platform and obtain the loans. I'll go through a worked example later to hopefully bring this to life. And what's the benefits of using SALT? So essentially you can obtain liquidity relatively quickly without having to sell your cryptocurrency. Now this is massive because I'm sure you guys can almost have this same view or resonate with you. You will probably invest a ton of money into cryptocurrencies. However, all of a sudden you need to buy something or pay for an unexpected bill, and this way you can leverage your cryptocurrency, obtain the cash, pay the loan back without having to sell your cryptocurrency. Also, another benefit is your loan is based off the leveraged item, so your blockchain asset, and it's not based on your credit history or credit score. So this is also great because it means you don't have to go through checks, you don't have to wait a long time to be approved, and also if you do have any credit history issues, then this is not going to hold you back. And then, as we said, it's a great way to leverage crypto assets and pay off whether it's a short-term credit card bill or even buying a home. So if you are heavily invested in cryptos and you are there for the long run expecting to 10x your investment, but you have you've got an expanding family and you need to buy a house, then you can still buy the house, have repayment plans, paying back the loan, and still be able to have your asset, which will hopefully grow in the future. So now let's go through a practical example. So Salt is a platform which enables borrowers and lenders to transact, and essentially is the marketplace. So lenders post their lending terms on the platform, and then borrowers can go into the platform and select the best terms that suit them. Then the lenders commit their cash funds to the loans, and then the borrowers can post their collateral, which is their blockchain asset, whether it's Ethereum, Dash, or whichever crypto there is. So are expanding their current acceptance of these blockchain assets, and then they enter into a smart contract. Now, what happens next? The funds are deposited directly into the borrower's account, and then the collateral is stored securely for the duration of the loan. And then what happens, the borrower makes his repayments monthly, and then once that loan is repaid, the collateral or the blockchain asset is returned back to the borrower. So that's a quick example, and if that didn't make sense, if we use a crypto as an example, taking a snapshot at their website, which is great for further knowledge, here we can see you can give your Ethereum and then get USD in return. So this will hopefully bring it to life in terms of a practical example. So I'm sure you guys have really intrigued into this particular project and also how it's going to work, but there are a couple of, or one major question I should say, but all of you guys are thinking of. So what happens if the market value of the asset changes? So we know with cryptocurrencies it's so volatile. The price today could completely different tomorrow. So how does Salt take care about maintaining this issue? So what Salt try and do is maintain an equilibrium of say 80% of the amount of asset, of the value of the asset rather. So what does that mean in the examples that can happen? So in the case that if the asset appreciates significantly, so it grows beyond what the price or the agreement was of the loan, the borrower has the option to obtain additional funds or simply just continue to pay back the loan as normal. So that's the first step, and this is probably something that's going to be more interesting. So what happens if the value of the asset actually drops? So say for example you put your Ethereum in, the price of Ethereum was I don't know, $350 today, and then tomorrow it drops to $200. What happens? So in this instance, if the value drops, then what Salt do essentially is they try and maintain this equilibrium, so this 20%, and basically the borrower will be given an opportunity to either put up additional assets to bridge the gap and bring the loan back to equilibrium, or also they could just liquidate some of the asset, so that again that brings the loan back to equilibrium. So I think it all depends on the terms of the agreed loan, but hopefully this gives you guys a bit of an insight in terms of what happens with the market volatility and how Salt deals with this issue. So what are the Salt products? So essentially currently there are three products on the platform depending on how much tokens you have. So I think initially if you have one token, you'll get access to around about 10k in terms of loans. If you then hold about 30 tokens or Salt tokens, you can transact up to 100k, and then if you go beyond that, I'm not sure what the final level is, you get access to over $1 million. So just so that we're clear, it doesn't mean if you hold one token you can get a 10k loan. All that means is basically if you have one Salt token, you can leverage whatever your blockchain asset is to get the 10k loan. So just to clarify that point. And then I just want to have a quick scan through the roadmap just to give you guys an idea. The company is fairly new. It's only, I think, just a few days old. So there's a lot ahead to be achieved. And I think personally, when you look at the Q4 17, Q1 2018 roadmap, there's a lot of key milestones. So I think there's a massive opportunity for further price increases. Also, another sort of note just on the team. The team currently on their website is around about 16 heads, and then you've got 5 advisors as well, which is a good size. So I think looking just briefly at the roadmap and the team, there's some good signs in terms of opportunity of investment. And just a final point before I move on, when you look at the board of directors, they've actually got Eric Voorhees, if I've pronounced that right, who's the CEO of Shape, Shift, and Prism. So I think this guy knows the crypto world really well. So I think it's a good sign to see him advising Salt. And now moving on to the TA, we can see with the daily candles, there's not much action here. The project's only been around, as I said, for a few days, a couple of weeks. And then the only line here we can see is a 21 moving day average, because we haven't actually hit 50 days yet to see any sort of meaningful analysis. So I think for me, what am I doing at the minute? At the minute, I think the project is, as we can see, it's far too early in terms of to do any TA on the analysis. However, I think what I am going to be doing is waiting for things to settle. Now, the line might continue to go up to new highs, but for me personally, I'm looking at these 3 entry points as I'm expecting a pullback, because we're far too early in my opinion. Now it could go up further to new highs, and I could possibly miss out, but that's something I can live with. What I'm keen to do is get in at a level where my risk profile fits. So I think for me to get around the 40k, 35k, and 32k I've got on the line there is, for me, makes sense and reduces my downside risk. So I think where would be my buy sort of levels? As I said, 40k, I'm going to dollar cost average and buy more as I go down. So I'm going to spend 25% of my investment here, and then 35% of my investment at the 35k sat level. And then if we do hit the 32k sat level, I'm going to spend my remaining 40% aside for this project and go from there. So hopefully you guys found this quick video very useful. Do let me know what you guys think in the comments section, and as always, I'll catch you guys in the next video.